even after paying the full premium, only a partial claim. This is where insurance companies play their game. It is around 2 in the morning. A man is standing silently in front of the hospital billing counter. Inside, his wife is in recovery after treatment, the doctor has already said the danger has passed, and the family has breathed a sigh of relief, but just then, from behind the cashier's window, a slip is pushed toward him, and on it is written, Insurance approved amount, 69,958. Balance payable by attendant. For a few seconds, the man just keeps staring at that slip. Because in his mind, only one thing is still going around. There was a policy, the premium was paid, it was a cashless hospital. Then why was the full claim not paid? This is where the story begins. The one that scares people less because of illness and more because of the language of the insurance system. And the truth is, scenes like this are not isolated in India. In several recent cases that reached consumer courts, policyholders had to say exactly this, that they had taken insurance before falling ill, but at the time of claim, it felt as if not a contract, but a trap had opened up. The idea of health insurance looks very simple. You pay the premium every year, so that if a medical emergency comes, the company handles the expense. But the ground reality is not that simple. The Indian Express, citing 2023 data from the Insurance Brokers Association of India, had reported that 20 private health insurers paid out less than 80% of the claimed amount of insured patients. That does not mean every claim was cut unfairly, but it certainly shows that the hospital's final bill and the insurer's paid amount often become two very different worlds. The gap that the patient and family see becomes the real financial shock for them. And many times, this gap is created in the name of rules, sometimes in the name of exclusions, sometimes in the name of non-disclosure, and sometimes in the name of non-medical expenses. From the outside, the policy brochure looks very friendly. Cashless network, sum insured, wellness, no claim bonus, restoration, add-on, everything polished and comforting. But when actual hospitalization happens, that is when the real power of the policy wording comes out. The insurer says, we paid according to the contract. The policyholder says, why was all this not explained clearly at the time the premium was taken? And in this tug of war, who suffers the most? The same person who takes insurance so that money worries reduce during illness. And at claim time, that same person starts worrying the most about money. A recent case from Bengaluru shows this contradiction very clearly. According to a Times of India report, a 70-year-old woman filed a breast cancer treatment claim, but the insurer rejected it, saying that a past cardiac condition had not been disclosed when the policy was taken. The Consumer Commission found that the insurer had failed to prove how the alleged cardiac non-disclosure was relevant to the breast cancer treatment claim. The Commission also noted that the insurer had not conducted the mandatory pre-policy medical checkup for a senior citizen policyholder. In March 2, 2006, the forum treated the repudiation as a deficiency in service and ordered payment of around 4.5 lakh, along with interest, mental agony compensation, and litigation cost, totaling roughly 5 lakh. Just think about it. Here, the real issue was not the disease, but whether the insurer tried to use an unrelated condition as an excuse to stop the claim. That is what got decided in the courtroom. Now come to the Chandigarh case. According to an Economic Times report, a policyholder approached the consumer court against Star Health because his wife's surgery bill was 2.25 lakh, while the insurer approved only 69,958. The remaining nearly 1.55 lakh was denied. Later, the District Consumer Disputes Redressal Commission, Chandigarh, ordered the insurer to pay the balance amount along with interest and compensation. This case is important because many policyholders think that if a partial settlement has been given, then whatever the company paid must be the final truth. Whereas many times, the partial settlement itself can become the subject of dispute if the deductions were not justified according to the policy terms, disclosure obligations, or communication standards. The Noida case opens another layer of this same pattern. According to Times of India, a policyholder went to the consumer forum against Reliance General Insurance because a valid mediclaim had been rejected on the basis of suspicion. The forum told the insurer that a genuine claim cannot be denied merely on suspicion, and the company had to pay the claim amount along with compensation and interest. This case gives words to the fear of countless policyholders who think that the insurer must need a very strong reason to reject a claim. But in practice, many times the policyholder has to prove that they did nothing wrong. In other words, even after paying the premium, the burden of distress often falls on the customer alone. Now the most important question. How exactly does this game happen? The first move is through non-medical expenses. Many such items get added to the hospital bill that the insurer does not consider payable treatment cost. In 𝐟𝐨𝐥𝐥𝐨𝐰's non-payables list, many items are listed, such as gloves, tissue paper, brush, mask, nebulization kit, sugar-free tablets, toiletries, oxygen mask, kidney tray, trolley cover, which are often not treated as payable if billed separately. The effect of this is that the patient feels the entire bill was medically necessary, but the insurer says there is a difference between treatment and consumables or convenience items. If a bill is 1,15,000 to 20,000 of it falls under such charges, then the patient may have to pay that portion from pocket. This is the silent cut that keeps hurting even after a cashless settlement. The second move is room rent limit and proportionate deduction. Many people ignore room eligibility while buying a policy, assuming it is a minor detail. But if the policy has a room rent cap and the patient chooses a more expensive room, then the difference is not limited to the room alone. In many policies, it can trigger proportionate deductions on related expenses too. In its 2024 regulatory clarifications, RDI told insurers that proportionate deductions should not apply in hospitals that do not follow differential billing, and that proportionate deduction is not allowed on ICU charges because ICU generally does not have different room categories. But in the practical world, room category still remains a major source of claim disputes. Because during the stress of admission, the policyholder needs a room, not the clause. Later, when the bill comes, they understand that choosing a more expensive room may affect doctor fees, nursing, and even procedure costs. The third move is pre-existing disease and non-disclosure. This is considered the most powerful weapon, because if the insurer can show that some material fact was hidden at the time the policy was taken, then the claim dispute can become very serious. But the problem begins when even an unrelated disease is pulled under the broad umbrella of non-disclosure. In the Bengaluru breast cancer case, the commission accepted that the relevance between the allegedly hidden cardiac condition and the cancer claim had not been proved. Similarly, in another Chennai case, Star Health rejected a hyperglycemia hospitalization claim by linking it to the exclusion for pre-existing diabetes, even though the policyholder had already disclosed diabetes and the waiting period had already reduced under the buyback clause. The Consumer Commission treated the rejection as arbitrary. That means the rule itself may be legitimate, but when it becomes protection and when it becomes a pretext, that is the real battle. The fourth move is copay, sublimits, and fine print. Many policyholders confidently say, "My policy is 10 lakh" or "My family floater policy is strong." But sum insured alone does not tell the full story. The policy may have a copay clause, disease-specific caps, limits on modern treatment, sublimits on treatments like cataract or maternity, and in some plans, a fixed percentage has to be paid by the insured in every claim. The sum insured shines in the brochure, but actual usefulness remains hidden in the clauses. That is why two policies with the same sum insured can turn out completely different in claim experience. The fifth move is the communication gap. Insurance companies often say that all the terms were written in the contract. Technically, that may even be true. But the practical question is, were those terms explained to the policyholder in a truly understandable way? Did the agent explain room rent cap, non-payables, waiting period, copay, and restoration conditions in language clear enough for the average buyer to understand? Consumer disputes repeatedly suggest that information asymmetry is huge. The insurer is comfortable with legal language. The customer is standing in emotional urgency. The contract looks balanced on paper, but the power of knowledge sits much more on one side. That imbalance is what makes it feel like a game at claim time. Now do not assume that the regulator is blind to this problem. RDI's 2024 Master Circular fixed time limits for cashless claim processing. According to the regulator, the insurer has to decide on cashless pre-authorization within 1 hour and has to give final authorization for discharge within 3 hours. The same timelines are repeated in RDI's FAQ as well. If discharge authorization is delayed beyond 3 hours, then the additional hospital charges may have to be borne by the insurer from shareholder funds. This is a major step for policyholder convenience, because earlier many families remained stuck at discharge desk for hours. But remember one thing, fast processing and fair payout are two different things. A claim being processed quickly does not guarantee that there will be no dispute over deductions. RDI has also given policyholders some protection on the moratorium period. According to the Health Department FAQs, after 60 continuous months of coverage, the insurer generally cannot contest the claim or policy on the basis of non-disclosure or misrepresentation, except in cases of established fraud. That means if the policy has remained continuous, portability or migration has been done properly, and fraud is not proved, then the long-term policyholder gets some regulatory shield. But that does not mean hiding information at the beginning has become safe. It only means that honest long-term continuity works in favor of the policyholder. Even then, on the ground, many disputes arise before the moratorium is completed, and then the policyholder may have to fight a legal battle. So are all insurers deliberately doing wrong? It would not be right to say that. Hospital billing itself is complex. Some items are genuinely non-payable. Some claims genuinely fall within the waiting period. In some cases, disclosure is genuinely incomplete. Some hospitals trigger deductions because of differential billing and package structures. In other words, not every partial claim is manipulation. But when a consistent pattern appears in which the customer gets comfort in the brochure and confusion in the claim, then distrust naturally arises. That is also the significance of the IBI data. It points toward a broad industry pattern that the gap between claimed amount and paid amount can be very large. For the policyholder, that gap is the entire story. And this is where the psychology of insurance must be understood. When a person pays the premium, they do not just buy a product. They buy assurance against future anxiety. They believe that on their worst day, the system will stand with them. But if on the worst day they have to struggle with policy wording, deduction sheets, pre-existing disease objections, room category clauses, consumables lists, and the TPA desk's explanation, then a feeling of emotional betrayal is created. The insecurity of illness and the stress of financial paperwork together mentally exhaust that family. That is why, in claim dispute cases, courts often award not just bill reimbursement but also compensation for mental agony. What does an ordinary family learn from this? First, do not understand a policy only by looking at the premium amount. Read the policy wording. Second, never take the risk of non-disclosure. Say clearly whatever exists. Third, understand room rent eligibility and the copay clause. Fourth, assume in advance that non-medical items may form part of the hospital bill. Fifth, if the claim is rejected or a very large deduction is made, do not treat it as the final truth. With the insurer's written reason, policy terms, hospital bills, and medical records, the path to grievance redressal and the consumer forum remains open. Many recent decisions show that the policyholder is not always the weaker side. Many times courts also strongly pull up insurers for deficiency in service. In the end, the real truth is this. Even after paying the full premium, only a partial claim is not just a slogan but the lived reality of thousands of families. The only difference is that some quietly pay the balance amount and some fight. The cases of those who fight reach the media. The stories of those who do not fight remain pressed inside a bill folder. In the world of insurance, perhaps the biggest game is not always fraud. Many times, it is complexity. So much complexity that the policy no longer feels written for the ordinary person, but in the company's own language. And perhaps that is the biggest danger of all. When the promise of protection gets lost in the jungle of paperwork. If this video has taught you something new, or if you feel this information should reach more people, don't forget to like and share the video. Your small share can become valuable and useful information for someone else. If you have any questions related to this topic, or if you would like to share your opinion with us, be sure to write in the comment box. We read every question and suggestion from you, because your feedback inspires us to create better content. And if you want to keep receiving such interesting and reliable information about business, the economy, and the world in the future, then don't forget to subscribe to our channel GRT Business and also press the bell icon so that you get notifications of every new video directly. At GRT Business, we always strive to provide you with accurate, balanced, and reliable information. Our news and analysis are prepared based on information obtained from various news agencies, public sources, and public opinion. We make every effort to verify and validate each fact as much as possible, but in case of any possible error or dispute, the responsibility lies with the respective sources. Our only aim is to present you with a correct and trustworthy perspective so that you can understand any topic better.